very close to that record on the S&P, not quite there. Did you think that overall the market is more due a pullback or a breakout higher?
We could easily break out. We've got the momentum, but I don't know how much follow-through there's going to be, Wilfred. Look, FOMO and Tina have carried this market higher. Fear of missing out, and there's no alternative. When you step back, you have to realize we've come a long way in a short period of time. A lot of good news, therefore, in the market. And, of course, even though the market's back to where it was at the all-time high, earnings are considerably lower. So we have much higher valuations. We've got uncertainty around the election coming up. We've got a fiscal bill that we can't seem to get through. And I put all that together and I say, not sure I want to chase stocks here.
What kind of positioning do you have then within your exposure to U.S. equities? Are you more tilted to the underperformers or those that manage to continue to show strong momentum to the upside?
So growth over value, because we're overweight technology and underweight financials. It's hard to argue the opposite when you have that positioning. I guess what I would further say is I think it's no longer either or. I think it's both and. We obviously had technology, the NASDAQ, growth leading the way today. Tomorrow could be just the opposite. We've had a lot of that rotation day by day. And I think that's the market trying to come to grips with where do we go from here? Do we continue to push the valuation levels up for these already highly valued growth stocks, or do we get some catch-up? And the answer will depend on how good's the economy, what happens to the dollar, what happens to interest rates, as you've all covered in the last few minutes.
Bob, all of the issues that you raised that make you nervous about investing in the short term, those are all known unknowns today. But even so, the NASDAQ is marching past a record close, the S&P within 4 points. So if investors aren't waking up today and getting worried about those things, when will they wake up and be worried about them?
Great question. That's why I started with FOMO and Tina. The path of least resistance, without question, is to the upside. At some point in time, the risk-reward just gets a little more uninteresting. Maybe we see the 10-year yield having moved from 0.5 to 0.6. Maybe it goes to 0.7 and 0.8. We were at 0.9 a couple of months ago, as you remember. That will cause, I think, some pause. Because remember, these higher valuations, especially growth stocks, are occurring because they're long-duration stocks. Like a long bond, when rates go down, long bonds do better than short bonds. Same thing in the equity market. That's been a huge tailwind for these big, high capitalization growth stocks that have carried the market higher. Move up in interest rates, even a little bit, probably casts a bit of a slowdown in all that good activity.